Could a decline in the US dollar impact your retirement plan? Matt Stevenson, president of Allied Wealth here, and welcome back to our On the Money YouTube channel. Today I wanted to talk on a couple of pressing issues that we're seeing in the news recently. One that's been with us here for quite some time, which is the dreaded I word, inflation. One that we're hearing more recently more about, and that's the decline in the US dollar. Is our status as the legal reserve currency of the globe in jeopardy, perhaps? Well, let's talk a little bit about inflation to start. And certainly when we think about the decades, the purchasing power of our dollars has certainly declined over time as cost of living standards have risen year in, year out. And here I've pointed out a few things to think about. The first would be minimum wage. Going back to the mid-70s, has gone from about $2.10 an hour to $7.25 an hour. Now that's an increase of about 245%. Even the median household income has gone from, and this is hard to believe, just shy of $13,000 per year to north of $78,000 over that same time frame. That's an increase of about 460% over the last 50 years or so. And that sounds like a lot until you consider things like the price of a new car has gone up almost 1,300% over that time frame. And the American dream, being able to buy a new home, the price of a new house has gone from about $50,000 to nearly $400,000 on average over that time frame. That's an increase of more than 800%. Even something essential to retirement planning, such as long-term care, has gone up nearly 1,900% over that 50-year period. So certainly inflation, the erosion of buying power of our dollars has had a significant impact over time, but there's this other issue that we have to think about. Even our former president has been talking in the news and on the campaign trail about this recently, and that's the decline of the US dollar, especially here the last year or so, post-pandemic. Now, we have enjoyed this status of the reserve currency, meaning most countries use the US dollar as kind of their default trading currency across the world. And it's been that way for many decades now. But really what I wanted to highlight is the status of the US dollar as the legal reserve currency. Could that be in jeopardy? Here I've got some interesting statistics for us. If we look at the last about 10 years or so, this shows the US dollar as the top line here in kind of a maroon color, compared to a basket of other major currencies, such as the yuan, the euro, things like that. What we see is that the US dollar, although it's declined a little bit over the last 10 years, there hasn't really been that significant of a change relative to these other currencies. In fact, if we think about the euro, over the last 20 years, has declined as a percentage of legal reserves across the globe. So certainly there has been a slight decline in the amount of reserve currency that the US dollar has across the world, but it's not that significant relative to most other currencies out there. In fact, the basket of all other currencies makes up at most about 5% of the legal reserves across the world today. So certainly it's something to consider moving forward as far as being able to maintain that reserve status. It's something that gives us a lot of privileges as far as even political power, trading authority with our other major trading partners across the world, to be sure. But right now, there's no other significant threat that has popped up in the recent decades. And even relative to these other currencies, the US dollar is about as strong as it has been in quite some time. Now, even though the US dollar is falling, we also have to think about it relative to these other currencies. So this is the US dollar index. So this shows us the relative strength of our dollar compared to these other major currencies that we took a look at a second ago. And this actually shows us that the dollar remains very strong. Certainly, if we go back over the last 30 years or so, there's been periods of time where the dollar was a little bit stronger than it is today. But in fact, through this pandemic era, beginning in 2020, the dollar has actually been, on average, gaining strength compared to these other currencies. So it's maybe not necessarily that the dollar is so great, it is declining in value, but relative to all other currencies out there, those are declining at an even faster pace, largely due to inflation that we're facing right now. So the dollar remains in excellent shape relative to its peers. And as of right now, we don't see a significant threat from other currencies to really challenge the US dollar. Certainly, keeping in mind a lot of geopolitical factors, a lot of trading partnerships, things like that moving forward. But the big thing to consider is, how might all of this impact my retirement plan? Now, certainly none of us know what the future holds, but when we think about things like inflation, typically what we want to build a plan around is historically assets that do well in a rising inflationary environment, as we've been in the last couple of years. Traditionally, the stock market does well in high levels of inflation. Even commodities such as gold, energy, tend to do well in rising inflationary environments. And when we think about a declining dollar environment, such as we're beginning to see, at least right now, things like multinational companies that do business overseas and international equities and investments historically have done a bit better in times like that. But that really points to the issue of maintaining diversification. And we talk a lot with our clients about this idea of conventional financial wisdom. You just put X amount in stocks and X amount in bonds, maybe look at it a few times a year and let it ride over the course of leading into retirement. And with all the volatility, all the uncertainties that we're seeing nowadays, there's too many risks to allow your retirement future to be dictated by more of a static type of investment philosophy, such as what we've seen work in the past. So variables like inflation, what is the future of the US dollar, the interest rate, the bond market, what is the stock market doing? All of these things that can keep you up at night, right? That's why we want to make sure that we look at your plan that we have in place. Are we making necessary adjustments based on the environment that we're in right now to remain successful no matter what the geopolitical environment is, our domestic political environment, economic impact of what's going on around us? Because these dollars not only have to get you to retirement, but through it over potentially the next 20 to 30 years to come. So these are some of the issues that we're talking about with our clients right now to make sure that we are adapting to this current climate and making those adjustments that we need to in the scope of their plan. Folks, I hope this video has been beneficial to you. If you like our content, make sure that you hit the like button below and be sure to subscribe to the channel for future content to come.